Okay, so now we will be looking at donations tax, right? So, this should not confuse you guys, right? So basically, donations tax, it is taxed when you are making a donation, right? And we all know that donations is you giving someone something without charging them, right? So you can donate anything. It can be movable or immovable, right? It can be physical or incorporeal. It doesn't have to be something physical, right? So the most important thing that you have to know with a donation, right, is that there is something called a deemed donation, right? So there is something called a deemed donation. So for example, this would work when, let's say, you donate something to a particular individual, right? So after you donate something to a particular individual, but however, the value, let's say, of maybe this laptop that you are donating, right, is higher than what this particular individual is this particular individual is providing you, right? So let's say, for example, this laptop is worth 10,000 and this particular individual is providing you with 8,000. So the difference of this is essentially a deemed donation, right? So we are going to deem it a donation in terms of donations tax, right? So we need to understand the liability of donations tax, right? So donations tax, it is only applicable if the donor is a South African resident, right? So donations tax will only be applicable if the donor is a South African resident, right? So whether the property that you are donating is at USA or South Africa, it doesn't matter. What matters is the donor has to be a South African, right? The donor might donate the property that he or her owns. Um, okay, sorry about that. I was disturbed with something. So, okay. So now the donor can donate a property that he or she owns, and it might be situated abroad, but that will also qualify for donations tax only if the donor is a South African, right? But the tricky part with donations tax, right, is that as much as the donor is liable, if the donor does not pay for the donations tax, the donor and the donee are both liable in terms of facing judgment, right? So it is quite unfair, but yes. So donations tax must be paid at the end of the month following the month the donations takes place, right? So if you donate on, let's say, the 29th of Feb, so your donations tax must be payable on the 31st of March, right? So the last day of the month following the month the donation took place. So your donations is normally done in an IT1 for return form, right? So it is done in that document. And the rate of donations tax that is going to be applicable to you guys is 20%, right? But for interesting sake, donations above 30 million would be 25%, right? So it is only 20% if it is the first 30 million, then anything above that would be 25%, right? So any questions before I continue? And the value of your donations, right? The value of your donations is essentially your market value, right? That will be transferred between ordinary residences, right? So now, Here's a very interesting one, right? So let's say now you are valuing fiduciary interest or use fract or any other interest, right? So we are going to use what? The capitalized rate. We are going to use the capitalized rate of what? Of 12%, right? And this you are not going to calculate. It will be provided to you in the test in most cases, right? So now the amount that you are going to use, you are going to be given different amount. You'll see when we do this example. You are going to use the lesser of the period of enjoyment, right? The lesser of enjoyment or the expected life of the donor, right? So you are going to use the lesser of these two. So now,
Sorry, James, I got lost a bit. What are we calculating here? Is this still the value of the donation?
yes,
Oh, okay.
but now it is with specific relation to interest, right? So example, if you see here at the 1st of September, right? They are telling that she gave the lifetime use fract of, so it is an interest. So how you would calculate this lifetime use fract is by using this capitalized rate. And the capitalized rate is essentially provided to you. So what you just have to use, you just have to use the lesser of the period of enjoyment or the expected life of the donor, right? So nothing difficult. So in the day you're given everything as it is, you just have to make the right choice, choosing the lesser of. It sounds difficult, but it really isn't. Right. So now, also this would also be applicable to, I forgot, the right to annuity, right? Right to annuity. So if you are given a right to annuity, not you receiving an annuity, you receiving a right to an annuity. For example, let's say um you had a spouse, the spouse passed away, and you are given the right of the annuity of your spouse. So you are going to choose the rate that's lesser of the period of enjoyment or the expected life of the donor, right? So now the required can also say that, or the scenario can say that the bare to minimum, right? The bare to minimum over maybe let's say property. So normally they could give someone the fiduciary interest or the use fract to a certain individual, just like here. The use fract was given to the daughter, right? The use fract was given to the daughter, and the bare minimum was given to the son, right? So with the bare minimum, how you would calculate that is that you would use the fair value, the fair market value less the annual value, right? Annual value also capitalized at 12%. So, and when you're dealing with a capitalized amount, you apply the same rules, right? You are going to use the lesser of what? Of period of enjoyment or expected life of holder now. Now it is different, not donor, holder. Expected life of holder, not do. Does it make sense? Or it will make sense. I know it doesn't make sense as yet. So those are the most important, not important, those are the only tricky ones. Then the rest are general ones, right? So now we would have exemptions, right? So remember that everything you do in taxation has exemptions. So every time you are looking at a particular topic, always think of the exemptions, right? in most cases, you'll definitely find the exemptions. So you would essentially have a general exemption, right? You would have a general exemption of 100,000 per year of assessment, right? So it is not per lifetime, per year of assessment. And then also you would have an exemption for what? For maintenance, right? So you would have an exemption for maintenance at what? At a reasonable amount. You would have maintenance at what? At a reasonable amount, right? So that those are the key exemptions that you can find, right? But there are a list of some exemptions that can apply. For example, when you donate to a spouse, um, when you donate to a spouse that you are married in community of property, and for example, maybe you are donating to a public company, and there is an etc. of donations, but I'll send you. I think they are plus minus or just above 10 exemptions that are commonly used, right? So, any questions before I can continue? Okay, now um what we need to do now, right? What we need to touch on is putting everything that we have just mentioned into the practical way that we can, right? So we are going to answer this required, right? It says we need to calculate the donations tax payable on each of the above transactions, and we need to support our answers with section numbers, right? Where exemptions are applicable. Um, I'm going to send you slides, so those slides are going to have the section numbers, right? So what I want us to do now, it is to answer required number A, right? So we would have our date, we would have our value, we would have our value, we would have our exemption, and we would also have our taxable value, right? And also we would have our donations tax. So they are telling us Emily Erasmus, who celebrated her 45th birthday on the 1st of September 2020, is an ordinary resident in South Africa. Emily is married out of community of property without the accrual system to check. So they have two children. The aggregate value of all donations made by Emily during the period 1 March 2018 to 29 February 2020 amounted to 3.5 million. Emily and Jack were still legally married on 28 February 2021. We are dealing with the 2021 year of assessment, right? As mentioned here. So we are dealing with the 2021 year of assessment. So should I do the first one for you and then you will take it from there? Or anyone who's brave enough to try the first one?
Donation to PPE is section 18A, so we'll fall down there
It will,
on the section.
okay.
The
So
donation section is from 18A section.
It's an 18A.
Yeah.
Okay, so
Section
technically,
18.
let me say data and details. So you are saying a donation to a public benefit organization is an 18A. So what value will that donation be at?
When it's aggregated with all of the others, it would be 10% of the taxable or capped to 10% of the taxable income, excluding
Okay,
other
so
things
what
like
would be the amount that will be subject to the limitation, the value, the donations value?
1,000.
50,000, okay? So it would be exempt, right? But now we
Yeah.
have to use our donations tax section numbers, right? So this would be a section 56(1)(h). But it's unfair for the examiner to ask you this section numbers because of essentially I don't see them as being that important, honestly, but it's fine. So your taxable value would be 0 because of now it would be exempt from donations tax, right? So now, Lisa, what's the transaction for the 15th of July?
I think for the 15th of July, the value would be the market value.
Okay, so we are dealing with sunglasses, right?
5,000. Yes, sunglasses, sorry.
Okay,
5,000, and it is not exempt.
okay. Why is it not exempt?
No, James, I don't know why it is not exempt, but I think it is not exempt.
Okay, let's read. Emily gave Jack. Who is Jack?
The husband.
Yes. Okay, let's move on. Emily gave Jack sunglasses that she acquired at a cost of 6,000 on the 1st of March to Jack as a birthday gift, right? So the sunglasses at a market value of 5,000. So now
Yeah.
the
Some
tricky part,
sunglasses, they can you not call it donation to spouse instead of sunglasses because what about sunglasses?
okay. So I am going to exempt it because of I see it as a voluntary disposal, right, to spouse. And when you go deeper into donations to spouse or transactions of spouses, there's a section 9 HP, somewhere along those lines, where you guys are deemed to be one person, right? So when you guys are deemed to be one person, it is essentially you are the same person. They can't take you both for donations. So,
Even if
but
you are married out of community of property.
there are exceptions where they can take you both, right? Especially on the income, but of an asset, you guys are the same people. It is like you buying something and giving it to your spouse, right? I mean, it is still within the same household. Nothing literally changed, right? So, for donations purposes, it would be exempt from donations tax, right? because of this is not essentially like income. It is just you disposing of a gift, right, to your spouse. Does it make sense? So it's part of section 56 1H B, right? It's part of section 56 1H. I mean 1B, not 1HB. The HBs, it's part of section 9. And you guys are not dealing with section 9s as yet, section 9 HBs. I think it is later in your syllabus, or yeah, I think so. I think it is late, not yet. Then for the 1st of August 2020, Sandra.
Can I do that one? Because I know you're going to give me 1 September.
1 September.
I knew you're going to give me 1 September. That's why I'm offering myself.
Okay.
So Emily sold a dining room table to her mother for 8,000 Rand. The dining room table had a market value of 10,000 on the 1st of August 2020. Emily acquired the table at a cost of 9,000 on 1 March 2018. So the value of this is 10,000. The market. No, wait. Yeah, 10,000. And then exemption
But we
is,
have to remove the cost,
yeah, the cost of, yeah,
the
the
consideration
cost of
received.
9,000.
No, received. You are sold to a mother for 8,000. So the deemed
So it's
donation,
10,000 minus 8,000.
yes,
If
this
the
is a
taxable
deemed.
value will be 2,000.
Yes, it's a deemed donation. It's not an actual.
Deemed.
Yeah, it's a deemed one.
Sorry?
It is not an actual one. It's deemed by section 58.
Mhm. So the 2,000 Rand, will that be the taxable value?
Yes. Okay, so what would be the exemption?
The exemption would be 9,000.
No. The exemption, remember, I told you that the person is entitled to 100,000. So there is no specific exemption that relates to this deemed donation, right? So now we are going to default to the 100,000 exemption that they've given us. So we'll exempt this full 2,000 and we'll be left with what, 98,000 that we can utilize for the 2021 year of assessment, right? So
Sorry?
remember I
Can you
said,
repeat that?
where's those where did I write it? Let me just go. So I wrote it there, right? So you have a general exemption of 100,000
Mhm,
for the year of assessment.
mhm.
So this is your general exemption. So anything that starts to surpass the 100,000 mark will no longer form part of your general exemptions, right? So now that 2,000, it's still within the general exemptions because of it is lower than 100,000. And there's no specific exemption for such deemed donations. So I'm going to default to the general exemption.
Mhm.
So
Okay.
taxable value, 0. Donations tax, 0, right? Okay, now, interesting one.
Sorry, Jane. I get the part where we're going to default to the 100,000 general exemption, but why do we have 98,000 there?
It's the remaining from the 100,000. We're just putting it here so just that we know that.
Oh, okay, okay. All
You
right.
do not write this when you're writing your answers. This is just for illustration purposes, so that when we do another one, we know that where are we getting this 98,000 from?
So the 100,000 is for the full year of assessment.
Yes.
Okay, all right.
So now Sfundo 1st September 2020.
Yo, thing is, this will be hard for me to answer because I was disconnected when you were explaining the dominion, and I'm not sure I remember it.
Okay.
Ah,
Okay. If you can't, you can nominate someone that you
well,
love.
I love all of everyone. I love everyone. So
Oh,
everyone must answer. I'm
everyone
joking. Let me
must
try,
answer.
but I won't be able to do Pet Dominion. And I know it's gonna be required somewhere. I literally forgot how it's done, but I know it's almost done. It's similar to user product. Maybe if you can go up on your side and I see a picture and I'll remember when you were explaining it. Or let me check. So I can remember. Oh, Andy, this person up there.
Okay,
Andy.
so yeah, sorry about that. So bare to minimum, yeah, here's the bare to minimum, and here's the use frac.
Okay, I know the user fact. Can we go to the Pet Dominion? Because I know it's a lot of enjoyment expected that of don't.
Okay, where should I go?
If I can just see Pet Dominion. Yeah, it's a period of enjoyment. I will correct each other. Let's give it a shot. So Emily owns a holiday house at Palito, South Africa. This property has a total market value of 1 million on 1st September 2020. She gave the life user facts of the beach house to her daughter and the bed dominion of the beach house to her son. September 2020. So on 1st September 2020, her daughter was 21 years old. So the life expectancy. So the life expectancy of a female 22 years old is 52 years, and then of a female 50 years is 26, which is probably for the donor. For a male 25 years is 50.8. So the current discount value of 1 million at 12% is as follows for the following persons. Okay, so we have two things here, user fact as well as the domain. So user fact, it's my enjoyment. Okay, let me remove my, just, just give me a moment, guys. I'm using earpiece.
Okay, I'll assume it is. So user fact is enjoyment and the donor. So I don't see the enjoyment. So will I go for just the donor?
You don't see what?
I don't see it, but there's no duration to how long they have the right to use the user fact and the bot dominion for.
Okay.
So there's no enjoyment. So it's the life expectancy of the donor
Okay.
that I will use.
Okay.
I can the list of donor and enjoyment.
Yes.
So there's no enjoyment.
Yes.
So it's just a donor. which is 26.71. I forgot how the calculation go, but I know we need to use the discounted thing of 1 million of a donor as well, which is 951,540,
Why are you choosing this one?
because it's the one of a donor.
It's the one of a donor.
Yeah.
Okay. Now let's reflect. We are using what? The lower of, right?
Yes.
Okay. So think of it again. Why are you using the 26.71?
Actually, my formula says I must use the lower, when it comes to life expectancy, I must use the lower of the donor or
Yes.
the enjoyment. When it comes
Yes.
to the years
Yes.
that I'm going to use, it's either the life expectancy of a donor or the enjoyment.
Yes.
When I calculate user factor, bed dominion is a bit tricky because I forgot.
Okay.
So the life expectancy of a male on the
Yes.
following birthday, which is 50 years, is 26.71, which is linked to 591,540.
So I just wanted you to explain it. You are right. I'm not disputing the fact that you are right.
Oh, okay.
Yes.
Okay. Yes.
I'm not disputing that fact. Okay. So now we are left with this 90. I gave you the answer. So, but okay, it's fine. So this exemption, we are going to deduct it, right? Because of this is the remaining exemption that we have, right? So essentially, what will we have as our taxable value would be 951 or 951,540 minus 98,000. 853,540, right? So we would have a donations tax at what rate? At 20% because of I haven't reached my 30 million mark as yet. Right. Okay. So now bare minimum. Lisa, who's asking a question? Is it Lisa?
Yeah, sorry, I've been asking too many questions today, but I couldn't really hear Sfundo when you guys were having the discussion. How did we get 951,540?
The 951,540 is that we chose the shortest of the daughter's life expectancy, right? So the amount that leads us to the shortest is the 26.71. So this is the shortest, right? The lower of these 2 years. So now I am going to look for an amount, the discounted value that's within relation to the 2671. So the amount that in relative to the 2671 is this 951,540.
Okay, thank you.
Okay. So now the bare minimum. Who are we electing? Rosalind? Rosalind, are you there?
I'm sorry, James, I was muted. Sorry,
Okay.
man. I saw the
No.
bare dominion of the property. Your calculation there, you explained to us it will be the fair market value of the property
Yes.
less the annual value, which is the capitalized amount at 12%. and that
Yes.
is the lesser of the period of enjoyment or the expected life of the holder.
Yes.
So now if I look at the question, the total market value of the property is then the 1 million.
Yes.
And then we will have the annual value. Is the annual value the 12% of the market value, James? The
Come
capitalized
again.
amount. It's your annual value.
Yes.
Is it 12% of the capitalized value,
Yes,
the
but
market value?
it is already been calculated for you.
They're at the bottom there by the 12. So for
Ye-
the male, it says the life expectancy of the male is 50.58 years, which is the 992,351.
Yes. Okay. So you are
Yes, to be that one.
provided. Okay, great. The trick here was to see that we have a female and a male, and the female is not the holder, right? Is not the holder of this
Yes.
bedroom minimum. So now we have to use the sons, and we are only provided with one. So there's no need for us to elect the lower of, right? Because of we are only provided with one. So you are absolutely right. We will deduct the 992,351, right? And this will give us an amount of 2607. So this 2607 does not have an exemption. We have fully utilized our 98,000, right? So as we have fully utilized our 98,000, we have no choice but to just use this amount as our taxable value, right? And we will multiply by 20%. To get the 521. So does this make sense to everyone? It's not that difficult, the bedroom minimum and a use price. Is it clear to everyone?
James,
Yes.
I don't understand how is on the exemption part, how is it zero? If what's this? The exemption, we still have a balance.
We do not have it. We utilized it here on the use front.
I really want to see something. Oh, I see. Sorry, it's the zeros.
Yes.
Okay, cool.
Anyone who has a question on this, it's not difficult, this thing, and it's free marks when you see it. It should be free marks.
So sorry, James, we'll never calculate this thing, will always be given.
99% of the chances you'll be given. That 1% chance, which is almost never, you won't be asked to calculate it, right?
But normally these are free marks in the
Yes.
second semester. So if they're giving it to us, what are we supposed to calculate?
You're just supposed to know the exemptions. Basically, they are testing donations tax. Donations tax tests the exemptions, whether you know them, right? And it might look easy, but not everyone can do it, right? As easy as it is, they still have to test it. So now let's go to the 15th of October. So now this question is dedicated to Andile. Andile, are you there? Okay. Kwanele, can you please help us?
I feel like it's not a donation since it's in relation to services rendered.
Bonus. Okay. Emily gave her housekeeper a bonus of 2,000, right? So it's in relation to services rendered. Okay. Very well stated. Come again.
I think your line is breaking. I don't know if it's mine or yours.
I think it's mine. I was saying that, yes, well stated, right? It is in relation to services rendered, the inclusion of paragraph C, gross income, right? So that would be applicable for your donations tax in terms of section 56, 1K, right? So now, this amount is fully exempt, so we will not have any donations taxes, right? So now, the next one, first of, okay, this one, the 1st of November 2020, Lisa.
James, why me? Why me? Why me? Okay. Emily indicated in a testament on 1 December 2020 that her sister must inherit a fossil watch when she passes away. The watch had a market value of 4,000 Rand on the day she compiled the testament. Emily acquired the watch for 4,500 on 1 March 2020.
Okay, fossil watch. Based on what? Based on death, right? So this is based on death. The donation where death is relative, right? So what would be our treatment? First rule,
Would
market value.
market value would still use 4,000. And I'd like to say it's exempt, but I'm not sure.
Okay, it is exempt. Anything that's within relation to death is exempt. So it was not donated by choice. It was donated due to the cause of death, right?
Okay.
Yes. So now on the 1st of November, the one that you skipped, Emily gave her son 10,000.
Oh,
So this is essentially maintenance. And maintenance, it is exempt if it is reasonable, right? If maintenance is reasonable, it is exempt. If the commissioner declares that maintenance is reasonable, it is exempt. So now, Sandra, the question that you are running away from, 15 December.
Emily gave her mother, who was 69 years old, 15 December 2020, an annual annuity of 5,000 for the next 3 years. Amount will be paid on the 31st of December of each year, of which the first will be paid on the 31st of of December 2020. The life expectancy of a female aged 50 is that, and that.
Okay.
So okay. In my head, I thought Emily was dead. She's not dead. She's alive
Yes.
on the date of this transaction. Okay. So, so it's the 5,000, not the 69 years old. So, is it 5,000 less the 3,711?
Okay. Now what? Remember, we have to choose the lowest of what? The lowest of the life expectancy or the period in use. And 3 years is the period in use, which is the lowest. The 11
So we
is
do it
great.
for the whole 3 years, not just for the year of assessment.
Here we are just choosing the value of donations, right?
Okay.
So we are choosing the lower of the life expectancy or the period in use. So we are going to do this every year, should it be applicable to us, right? We are going to recognize it, let's say, if Emily also gives a mother again another amount, you are going to use the lower of to recognize the donations value for donations tax purposes. So it does not essentially mean that we are going to do it the same way as allowances, where we would include it year in, year out. But we only do this when there's a transaction, right? Yes. So what you just need to remember is that you need to choose the one with the lowest years. And the male and the female can also be a trigger that might confuse you. But the key thing with this one is just that you just have to use the lowest years. So the period of use is the one with the lowest years. Yes.
So when we are to enter the amount, we use the 12,009 Rand.
Yes.
So it's a once-off deduction if we use that one.
Yes.
Okay, so you don't need to divide it by the number of years, etc.
Then we do not have any exemption because of the general one is fully utilized. So I am going to take this amount and multiply it by 20%, right? So I will multiply this amount with 20%. And then for the final one, right, which is on the 28th of February, right, 21. This one I'm going to give it to Roslyn. This one is a bit tricky. It's a bit tricky because of it. It also is integrated with one learning unit that I haven't taught you guys, which I'm going to teach you guys, I think on Thursday or Friday, between one of those days. It's inclusive of that learning unit. But the other portion of the scenario, you can get it right. So here's the full scenario of the 28th of February, 2021. So can you please help us, Rosalie?
I will try, James.
Okay, you can ignore this portion.
No, if I say ignore the interest-free portion.
Yes.
He was aware of the donation calls for the seller to right. Emily being aware of that there may be donation consequences, decided to write off a loan of 1 million that you originally made to the family. Write-off of debt. So that is a difficult one. I haven't seen it one yet. Let's see. James, I don't think it will be. If it's written off and she's avoiding tax consequence, then there is no donation. All right.
Why not?
Because it's not donated. It's more of, I don't know.
So you gave someone money and then you told them, do not pay me back. Why can't it be a donation? Because of you, essentially that money you donated because of you don't want the repayment.
Because you didn't ask it back.
Yes.
Okay. I'll tell you now. No, I don't know. I don't know. Can the other guys help me with this one?
Okay, you can choose someone.
Sandra?
Okay. Sandra, you have been nominated.
Guys. Ah. Okay. Uh, okay. Anything happening? Okay, since the commissioner deemed it as a donation, then we must put the 1 million with no exemption, and then 1 million times 20%.
Okay, great.
Yeah.
Thank you. So now, this part which I haven't taught you guys, but I can just show it to you guys since I'm going to teach you in 2 days. So, this deals with trust, right? This is trust. The loan was granted interest-free to the family trust, right? So it was given to a family trust, so it triggers Section 7C, right? Section 7C is being triggered, and Section 7C deems an interest-free loan to be a deemed donation, right? So you are provided that the official interest rate is 8%. So now you are essentially going to take this 1 million and you are going to multiply by 8%, right? So now remember what you're going to do also. You're dealing with interest. You can use the number of days to get this mark if it is assessed. 366 because of we are in a leap year, right? Yes, this year of assessment was a leap year. I mean, this current one is a leap year, right? The 28th February, 29th February 2025 is a leap year. So if you are asked in that perspective, remember the 366. So now, what you would essentially do is that you would just say deemed donation. So even when we are going to be dealing with trust, this would be a deemed donation of 80,000, right? as it is 1 million multiplied by 8%. And we would essentially have no exemption, but if the general exemption was still there, we would have utilized it, right? So it's not difficult, trusts. Trusts are not that difficult. So it gives me what? 6,100. So does this make sense to everyone? Donations tax are not difficult. Just know your exemptions. Then you should be fine. And this one, there's no need for us to essentially focus that much on it. Those capital gains, it is not much of a focus. But what I can tell you is that they are saying that you have to calculate Emily's capital gain or loss in respect of the first 3 donations made, right? The first 3 donations. This one will not be a donation because of cash is not an asset, right? It will not be a disposal, sorry. It would not be a disposal because of disposal, you need to dispose of an asset and cash is excluded from the definition of an asset, right? And obviously, the second one, which is the sunglasses, right? Sunglasses, you can calculate the capital gain or loss, right? So sunglasses, the market value, you take the market value and you deduct this 6,000 and then you'd get a capital loss of 1,000. But now you would disregard it because of section 9HB, which disregards capital losses of spouses, right? And then with your dining table, obviously, you are dealing with a connected person, right? Emily is connected to her mother. So now you would use the market value on the date, 10,000 minus the cost of 9,000. And then the capital gain of 1,000, you'd also disregard it in terms of what? Paragraph 53 of the 8th schedule, because of we have to disregard any capital gain on personal use assets. Nothing ethic there. And what is the donations tax return called in practice? It's IT 144, right? So any questions on donations tax? Anyone who needs clarity on donations tax? Nothing difficult, right?
James, you mentioned something about the percentage going to 25%, and you said 3 million. What, did I hear you correctly?
30 million.
Huh?
30 million.
Oh, 30. Okay.
Yes.
Thanks, because I was wondering why we were using 20. I thought it was 3 million since they said donations were 3.5. Thank you.
Okay, great. Any further questions? Okay, great, guys. This brings us to the end of today's lessons. We'll meet again on Thursday. Good night, everyone.
James, can you hear
Yes.
me?
Yes, I can.
I wanted to ask on the so I was losing it because of internet. On the 4,000, the one of the 1st December.
Yes.
Yeah, I wanted to ask why on that first one of 1st August you minus the 8,000 from the 10,000 from the 10,000. On the 4,000, there's nothing. It's just the 4,000.
I'm not following your question, sorry.
I'm saying on the 1st of August, the one where Emily sold a dining, you minus the 8,000 from the 10,000. So I wanted to ask, so I wanted to ask why on the 4,000 we did not do the same.
Okay, the difference is that the mother paid 8,000, so the donation is deemed to be in the amount received, right? And then on the 1st of December, right?
Yeah.
The watch had the market value of 4,000. So her sister did not contribute anything, right? There was no consideration that was provided. The mother provided consideration, but with on the 1st of December 2020, there's no consideration transfer.
Okay.
Yes, Fundo.
Just a young request. Hopefully it won't be too much. Can we
We'll
please have the
see.
slides since we don't do them anymore in class, before class, so we can go through them. When you're pointing out important things, we know exactly what you're talking about, and it's easy for us to do questions.
Okay.
So when you send the video for today, you throw in the slides for the next class.
For the next one.
No, just example. I want to imagine when you're showing in the video for this one, you can just give us the slides for the next class in the relevant group.
Okay, I'll do that latest tomorrow morning.
Thank you.
Any further questions? Okay, enjoy the rest of your night, everyone. Good night.
Thank you, James. Good evening. Good night.
Bye.
Night.
Night, everyone.